the Young Turks 40 years.
Hello and welcome to this special edition of Young Turks from Let's Ignite 2016. I'm Shruti Mishra. Powered by Let's Venture, a tech platform that connects startups to global VCs, angels and startup programs, its second edition, Let's Ignite 2016, is being held in Bengaluru. And Young Turks is proud to be the official television partner for the second time in a row. Take a look at all the action. India's foremost conference that curates VCs and angel investors and connects them to high-growth startups, Let's Ignite 2016 saw over 250 investors from across the globe and a well-curated presence of 20 high-growth startups.
We've done about 65 deals on the platform. We raised about $20 million in funding online. And I think the trends we are seeing is that the angel investing is not really going to change, because I think angel investors continue to be, they are not, so all the hype and all the kind of hyper-funded funding is actually happening in the Series D and Series E stages, right? So it's not happening at the angel stage. But what I think conversations are changing in angel investing is questions are being asked about, just about unit economics, right? Just about profitability, right? How are you building traction? So I think last year we saw a lot more questions being asked around how much money are you spending to build the traction, but now is how much are you doing grounds up to build the traction?
Ronnie, in November last year you launched an online education program called Upgrad, and now in collaboration with Let's Venture, you're launching another called Angel Investing. Can you throw some light on that?
Yeah, so I think the context of online education and online learning in India, I think, is something that we are very committed to, because we believe that's the way it's going to grow. And I think a course there teaches you about the 20 mistakes that maybe you don't need to make when you start up. Similarly, I think our collaboration with Let's Venture on angel investment is that for a lot of people it's an extremely exciting thing to do, and we're trying to sort of in that 4 to 6 weeks create an environment where we can give them a lot more of cross-learnings across the because it's not about just the decision-making of being an angel investor. It's not about finding the entrepreneur. It's about then what do you plan to do that.
Another major highlight of the event was the launch of India's first mobile app that will help angels and entrepreneurs discover and connect with each other.
With the mobile app, what we are trying to do is give them all the information right at their fingertips and be able to connect with investors, or rather founders, real time on our mobile app through a chat, and do the entire deal flow right from the mobile. So an investor chooses a startup that he wants to like and he wants to chat with. At any point he is not happy with the conversation, he doesn't want to take it forward, he removes it and he is free to do his own stuff.
The two-day event also showcased reverse pitches by VCs and angels who pitched alongside the startups they were investing in. But the highlight for Young Turks was the Angel Investing Primer 101 run by Sharad Sharma of iSpirit and Shekhar Kirani of Axel Partners. Both Sharad and Shekhar, in their inimitable style, spill the beans on how to become a successful angel investor.
So the first is, while you're learning about angel investing, make sure you do it only with play money. You should be willing to lose everything that you invest, because it may never come back. So you can only sleep easy if your wife or your husband has agreed on that kind of a paradigm. The second is that don't get into momentum play. And I shouldn't say this loudly on a media channel, but anything that's already appeared on television or newspaper, too late to invest as an angel investor. You must invest in something that is less fashionable today but will become fashionable tomorrow. That's very important. Third, make sure you are building value into companies. You are investing in companies where your involvement will make a difference to their outcome. Not because of the money that you give them, but because of the expertise and the company building value that you bring. So that is the third one. The fourth is plan your portfolio. You won't get a return back very quickly. Sometimes it may take 4, 5, 6 years to do that. So if you want to remain in the game for 4, 5, 6 years, make sure you set aside enough money. Or whatever money that you set aside, play money, make sure it lasts for 6 years. So make your investment sizes small and the number of investments few, so that you can last for 6 years. And finally is that you must have a written down investment strategy. Unless you have that, you will be inundated by startups coming to you and you will not be able to filter them at all. and an investment strategy will allow you to do that.
While having a sound investment strategy is a must for angel investors, ex-chairman of the Unique Identification Authority of India, Nandan Nilekani, stressed that building companies to last doesn't just involve sound business fundamentals, but making sure the venture is creating value for all stakeholders involved as well.
Building companies to last doesn't necessarily mean building it over a long, definitive time period. This will be about creating value as well, right?
Yeah, no, let's take the classic case of WhatsApp, right? So you had a situation in the world where the world's biggest companies, which had billions of dollars of capital, had the finest engineers, didn't get it right. And a bunch of guys, the Ukrainian immigrant who came from Ukraine and grew up on food stamps, was refused a job at Facebook, was able to create this app, and it took off not in America, it took off in India. I think Indians are bigger than WhatsApp. I don't think anybody there uses it. And he had a choice to remain independent, but he got an offer of $19 million or whatever the thing from Facebook, and that was the right decision he made. So it's all, or Instagram, right? 12 guys, $1 million valuation. Sure. It's all, it's up to you what you want to do.
You're saying you look at companies that look at the long term. So how would you define this? What really?
Well, I have a very clear philosophy. I don't invest in fintech because I actually do strategic policy work in fintech. I work with RBI, SEBI, Ministry of Finance, NPCI on transforming a payment system. So I don't want to be an investor and have conflict of interest. I don't invest in Aadhaar-based startups because I don't want to profit from what I created. And I don't invest in education where I only do philanthropy. So those are my rules. So that eliminates a lot of startups. But what I think is the big thing which is happening is, I think India going from being disorganized to organized. And the historical way we thought of organized was we built large companies and had jobs and all that. So the new model of organization is using the ecosystem of phones to bring people together in a virtual way. And that is going to be a major play. So I look for those kind of companies which are doing something exciting, something new, where the entrepreneurs are good guys with good men and women with long-term views.
On that note, it's time for a break. Stay tuned, there's lots coming up from Let's Ignite 2016.
The Young Turks 40 years